Good afternoon. My name is Toby Parch Davies, and I'm joined today with my colleague, Dr. DeWanda Farmer, to provide a workshop on CDFIs, Community Development Financial Institutions, and the role they play in addressing economic disparities. And this is part of a webinar series with the Project E3 Educate, Empower, and Employ project. I'm the project director on poverty and disability at the UNH Institute on Disability. I focus on rigorous applied research and evaluation in the areas of social determinants of health with specific content expertise in the applicable areas of workforce development, supported employment, and asset building. I have a long established partnership with vocational rehabilitation agencies and community rehabilitation programs, having worked for 30 years as a service provider, developer, researcher on collaborative employment, healthcare, and policy initiatives designed to improve employment outcomes and social mobility of persons with disabilities. My current projects include a randomized controlled trial study in partnership with the National Disability Institute, the Virginia Department of Aging and Rehabilitation Services, and Syracuse University. In addition, I'm the principal investigator for the Granite State Transition and Post-Secondary Program for students with intellectual disabilities. Recently, I provided instruction for the Community Development Financial Institution Funds training designed to increase capacity of CDFIs to serve people with disabilities. I hold an MA, MS, and PhD in Community Economic Development and Policy from Southern New Hampshire University. And with that, I'd like to pass it over to Dr. DeWanda Farmer to give some more information about her background.
I'm so happy to be here participating in this training today. I'm Dr. DeWanda Farmer, and I am the founder and owner of a small boutique consulting firm specializing in community development. My primary clients are community development corporations and community development financial institutions. I am the CED doctor, and I focus on affordable housing finance and real estate development, small business development for women and minorities in low-income communities. I've worked with the U.S. Treasury for probably the last 16 years on a variety of the programs under the Community Development Financial Institute, which provides resources to low-income communities. In addition, I'm the co-founder of a national nonprofit, Smart ALEC, which is responsible for affordable housing, economic development, environmental policies that impact disparities in low-income communities across the United States. And I am also part of the executive leadership team for an international organization called ADDI, ADDI, which stands for the African Diaspora Development Initiative, which is probably a $2 trillion initiative in business economic development across the United States. And finally, I also serve as an executive leader, a thought leader in the HBCU community, working with historically Black colleges and universities across the country, helping them to develop ecosystems that support entrepreneurship, particularly in STEM environments. So I too have a PhD in community economic development from Southern New Hampshire University, which is how Dr. Davis and I have been connected for over a decade. And I'm so happy to work with her today. Thank you for having me.
Today's session will provide information about an important resource in local communities, which is largely untapped in trying to solve the problem of persistent poverty: community development financial institutions. Today's session will help you understand the following. First, it will provide some problem analysis and context for why we need an expanded theory of change around redressing persistent poverty, the CDFI fund and its role in mobilizing economic development in local communities, better understanding what CDFIs do in communities, the types of resources they provide, and strategies for exploring new partnerships with CDFIs. Also, it's really important to know what CDFIs want and need to know from you. You do fundamentally different things, but for the same reason, to help provide better economic opportunity to persons with disabilities. Finally, we'll provide resource links to other resources that you can follow up with after today's session. So the context for today's discussion, goes back to the aims of Project E3, which is to improve employment and address poverty. But in improving employment and addressing poverty, it's important to acknowledge that poverty, in being persistent and pervasive, it indicates multi-layered needs of economically disadvantaged targeted communities. So while working to ensure employment opportunities for people with disabilities is critical, employment alone is not enough to address economic disparities. Now even more complicated given the implications of COVID and other social determinants. For example, prior to COVID, the employment rate nationally of persons with disabilities was significantly different from the population rate of the general population without disabilities. We won't know the true impact of COVID for some time, but it is safe to assume that workers with disabilities are among those who have suffered more layoffs, experience health vulnerabilities, and are likely at risk more financially than before, given the high prevalence of poverty pre-COVID. Thus, it is important to address issues related to social inequality at the community level through new financial instruments and new partnerships to promote systemic change in economic opportunity for persons with disabilities. So first, I'd like to share with you a little background information on some of the statistics that inform the policy problem. As illustrated in the 2019 Annual Report on Disability Statistics and Demographics, multiple disparities exist when it comes to economic indicators and social determinants of persons with disabilities when compared to the general population of people without disabilities in the US. In terms of high school, 16.7% of young adults with disabilities had not attained a high school diploma, compared to 7.7% of their peers without disabilities, reflecting a less than high school gap of 9 percentage points. In terms of college, 15.6% of people with disabilities had not attained a high school diploma, compared to 38.4% of their peers without disabilities, reflecting a college or more gap of 22.8 percentage points. In terms of employment, the employment to population ratio for people with disabilities was 37.5%. In contrast, the employment to population ratio of people without disabilities was 77.8%, nearly double that of people with disabilities. This amounted to an employment gap of 40.3 percentage points. And then earnings are also problematic in that the median earnings gap represents a $5,796 difference in income for full-time workers when comparing people with disabilities to people without disabilities in the US. And then poverty, again, was also significantly different for persons with disabilities compared to the general population. For persons with disabilities, 26.9% of people live below the poverty line, compared to people without disabilities, which was estimated at 12.2%. This means that the poverty gap between people with and without disabilities was 14.7 percentage points. And getting to other characteristics that are really important to today's conversation has to do with the extent to which people with disabilities are banked or underbanked. According to an FDIC study that was conducted in 2015, people with disabilities were found to be more likely to be unbanked or underbanked, in that 28% of people surveyed were unbanked or underbanked, compared to 46% of people without disabilities, reflecting a difference of 18 percentage points. The same is true when it comes to trust in financial institutions. People with disabilities are more likely to indicate a distrust of financial institutions, 8 percentage point difference compared to the general population that participated in the survey. In addition, persons with disabilities are less likely to own a savings account, are less likely to, but are more likely to use alternative financial institutions. Alternative financial institutions are things like check cashing outlets, such as money orders, bill paying services, payday loans, prepaid credit cards, and rent-to-own transactions. 38% of people with disabilities report using alternatives to banks compared to 25% of those without disabilities. In addition, also reflecting the poverty problem we've previously discussed is people with disabilities are more likely to report a lack of funds to keep in bank accounts. So it's not just not having access or utilizing a bank account, but they don't have the resources to put in the bank account. In addition, they report a higher likelihood of banks and feeling as though banks are not interested in serving them and their banking needs, as well as just not having access to credit. As you know, credit is really important, not just for qualifying for a loan, a credit card, but also other really important life aims, like being eligible for an apartment, qualifying for a job, using car rentals as needed, and other really important issues. So people with disabilities are more likely to not have access to credit, as reported in this FDIC study. Slide. So given the pervasiveness of poverty, we're proposing a comprehensive theory of change as a means to change condition. While employment and income are critical components to financial security and well-being, as the data suggests, earnings alone may not be enough to move people out of poverty. A combination of inputs are suggested here and are needed to help transform the situation. So critical, and good rules of thumb, obviously, for those of you who are VR counselors and employment providers, is this whole issue of public benefit protections. So many of the people that you serve are people that are eligible for SSI and SSDI, so supplemental security income and Social Security disability insurance. Those are really, really important income supports for people with disabilities. In addition, health insurance that may be attached to those benefits, whether that's Medicaid or Medicare, really critical needs to maintain those healthcare protections that are so important to the quality of life of people with disabilities. But there are other important services, whether that is access to affordable housing through Housing and Urban Development or the Section 8 program, community-based human service programs for more longer-term supports that people may need, and access to transportation resources for accessible transportation. Those are all really important programs that we know, and much of our work in the last decade has really been focused on securing access to those things for people. And while those are important, those resources alone, as we know, are not enough to affect poverty. So the VR program clearly is critical for access to employment, access to the services that people need to be able to work and work at competitive levels in integrated employment. But work alone is not enough. It's how to use and maximize that earned income so that people have livable wages and or are able to accumulate the resources they need for greater financial security and well-being. And so what I mean by that is leveraging as many work incentives as possible, as well as accessing other resources that exist in the community, such as tax credits. So an example of that is the earned income tax credit. Also, other savings programs that help to build financial well-being. And one example of that is the ABLE account, which is a new, relatively new provision available to people with disabilities who qualify to save money while not disqualifying them from SSI, SSDI, or Medicaid programs. Not a lot of people utilize all of these things in combination, but our comprehensive theory of change really is about promoting access to all of those things and braiding them together so that people are better off financially. And then another piece of that is being financially informed consumers, knowing, how to navigate the public benefit programs. Benefit specialists and work incentive specialists, it's an important part of the rehab program. But what about financial literacy? How do you build credit? How do you access these tax credit programs? How are you a savvy financial consumer and avoid scams and pitfalls when it comes to solicitations that you may receive? So all of that is really important. And what we're proposing today is that, community development financial institutions are a big part of it, because what those organizations do, and as Dr. DeWanda Farmer will share more with you about today, is how they affect change at the community level. A lot of what we've talked about thus far in terms of public benefit protections and participation in the VR program are things that we assist people with on an individual level basis. And what CDFIs do is really look at the local community. What does the community need, and how can CDFIs help local communities become economic empowerment drivers. So the purpose of today's session is exploring those new partnerships with CDFIs to address systemic challenges in local communities through impact investing in local communities, to promote workforce development, affordable housing, and access to affordable credit and banking services, such as community development credit unions, to offer credible financial services to underserved people with disabilities. So having explained and contextualized this more comprehensive theory of change, combining income support programs, health insurance, VR services, and now exploring partnerships with CDFIs, I want to bring us back to a slide that's been used before on some of these webinars that indicate the top 5 concerns that are limiting service provision or economic opportunities for people with disabilities that E3 has addressed in their technical assistance package. This lack of employer networks, lack of self-employment, pervasive poverty stressors, educational disparity, and lack of transportation. All of these factors or concerns are things that potentially community development financial institutions have a role in addressing at the community level with the proper partners. So with that, we're going to move on to the next slide and talk a bit about what the CDFI fund is, which is a part of the U.S. Treasury Department. The mission of the CDFI fund is to expand economic opportunity for underserved people and communities by supporting the growth and capacity of a national network of community development lenders, investors, and financial service providers. The fund achieves its purpose by promoting access to capital, loans, local economic growth in the following ways. So it directly invests in and supports and trains CDFIs that provide loans, investments, and financial services in TA to underserved populations and underserved communities. It provides new market tax credit program by providing an allocation of tax credits to community development entities, which enable them to attract investment from the private sector and reinvest these amounts in low-income communities. It also facilitates a bank enterprise award program by providing an incentive to banks to invest in their local communities and in other CDFIs. And through its native initiatives by taking action to provide financial assistance, technical assistance, and training to native CDFIs and other native entities proposing to become or create native CDFIs. It also has a CDFI bond guarantee program, which issues bonds to support CDFIs that make investments for eligible community or economic development purposes. And finally, It provides a capital magnet fund, which offers competitively awarded grants to finance affordable housing solutions for low-income people and low-income communities nationwide. So these are all resources that you're not familiar with. These are untapped resources in local communities. But as you can see, there is a lot of opportunity through the CDFI fund and through CDFIs that could be leveraged to address some of the problems that we see related to persons with disabilities. So with that, I'm going to move on to the next slide, and Dr. Farmer is going to talk more about what CDFIs are and the services and products that they offer the community.
Thank you, Dr. Davies. Good afternoon, ladies and gentlemen. Let's start with what are CDFIs? And I'm going to tell you a little bit about the CDFI fund and what are CDFIs. So the U.S. Department of Treasury Community Development Financial Institutions Fund, also known as the CDFI Fund, helps to promote access to capital and local economic growth in urban and rural low-income communities across the nation through monetary awards and the allocation of tax credits. Financial institutions certified by the CDFI Fund are eligible to apply for monetary support and training to build organizational capacity. The CDFI's fund's model is competitive, and each of its programs provides CDFIs with the flexibility to determine the best use of limited federal resources in their community. CDFIs are specialized financial institutions that provide financial products and services to populations and businesses located in underserved markets. These institutions have community development missions and a reputation for lending responsibly in low-income communities. CDFIs include banks, credit unions, loan funds, microloan funds, and venture capital providers. The CDFI fund, through its monetary awards, provides funding as well as technical assistance to support CDFIs. So the CDFI program is designed to provide a variety of financial products and services in the market. And these include both financial assistance and technical assistance awards to empower CDFIs to grow, to achieve organizational sustainability, and to contribute to the revitalization of the communities they serve. These competitive awards support the enhancement and the ability of these organizations to meet the needs of the communities they serve. Technical assistance grants are offered to community development financial institutes and certifiable agencies to build their organizational capacity. Technical assistance awards are limited to a maximum of $125,000 and are used for capacity development that is integral to the organizational sustainability and success of their financial program. CDFIs often use these flexible awards to purchase equipment, to hire consulting or contracting services, to pay salaries and benefits, or to train staff or board members. In addition to the direct benefits of these awards, most CDFIs are able to leverage their CDFI program awards many times over by partnering with traditional financial institutions, private foundations, and other funders, right? And then the second type of assistance they offer is financial assistance. These awards are available at a maximum of $2 million and may be made in the form of loans, grants, equity investments, deposits, and credit union shares, which CDFIs are required to match dollar for dollar with non-federal funds if they are a core CDFI, which means they have assets over $5 million. They also have SECO, what they call small and emerging credit agencies. And these SECA entities, they don't have to have matching funds, and matching funds are not required for technical assistance. So I just wanted to make that clear. But these CDFIs are able to make investments in low-income communities in housing, in small business loans, microenterprise loans, as well as financial literacy and coaching opportunities. And so I would like to just mention that these CDFIs have began to try to focus some of their lending on disability. And so in the last 3 years, the CDFI fund has a set aside of disability assistance dollars. This year, I believe it was $4 million. And so some examples of how these products and services would have a primary purpose of benefiting individuals with disabilities could include loans to purchase or renovate a building that would house a school that provides educational or social services to children and young adults with disabilities, or maybe a loan to renovate an independent living home for individuals with disability, pre-development loan for community service organizations that provide transportation services, housing services, and job training for individuals with disability, working capital loan for business that primarily employs individuals with disabilities, loans to purchase assistive technology such as hearing aids, stair glides, seat lift chairs, wheelchairs, scooters, computers, specialized software, home modifications like ramps and roll-in showers and lower countertops, widened doorways and adapted vehicles, lowered floor ramps, hand controls, things of that nature. And in addition, there's financial counseling and transitional planning assistance for individuals with disabilities and their families. So the next slide, I would want to talk just a little bit about affordable housing. But before I do that, let me just say that the CDFI can provide a range of financial products and services for people with disabilities. And they mainly focus on 4 basic products and services. Those are asset building strategies that support asset building development, like 529 ABLE accounts, which I'm sure most of you are familiar with. Assistive technology for lending to ensuring that everyone has access to assistive technology, business lending, and housing. And I want to start now by talking about affordable housing and the way that the CDFI fund is able to support key housing initiatives. Affordable housing and accessibility, affordability are key issues, and discrimination for people with disabilities. People with disabilities experience unique challenges in the housing market. This population not only requires quality, affordable, and accessible housing, but they also need additional supports and services that make it possible to live, work, and play independently in the community. Research has demonstrated that costs incurred by people with disabilities cycling through public institutions are far greater than the cost of providing rental assistance with supports. And so the CDFI invest in housing loan funds that may provide pre-development loans, bridge or gap financing, property acquisition loans, construction loans, and again, these might be used for home modification and rehabilitation, right? And so people with disabilities are probably going to have a greater impact due to COVID than those other low-income people who for sure are facing a tsunami of potential evictions once the emergency temporary restrictions on evicting people has been lifted. And so I think that this is a great time for community-based organizations and community development corporations to work with CDFIs to identify what their needs are for the people in the disability community, and to help people with disabilities to get the support that they need to sustain their housing. So we really need to think about how CDFIs can help with those efforts of housing organizations so that they don't continue to just build segregated housing and really integrate people with disabilities into communities holistically. And if we'll go to the next slide, I'd like to talk about small business lending. And so the CDFI is investing in two types of funds. They're either housing loan funds, or they're business loan funds. And under the business loan funds, you have small business lending and you have microenterprise loans. Microenterprise loans are generally under $50,000. In some programs, it's capped at $35,000. But for our purposes here today, the CDFI considers loans under $50,000 to be microenterprise loans. Microenterprise loans are often used for startups, for self-employment opportunities where people have a skill or a craft that they might do that they could actually turn into increasing their financial wherewithal. And that is true of people with disabilities as much as it is the general population. And so I believe that if disability organizations create linkages with community development financial institutes, you will find a willing partner with financial resources to invest in small and micro business opportunities for the disabled community. Small business loans may be given from, $10,000 up to $100,000, maybe $250,000 at some CDFIs. And these loans are usually used for real estate, maybe the acquisition, rehabilitation, or new construction. Sometimes businesses use this equipment for equipment loans to purchase new equipment, particularly in manufacturing or some kind of production, right? Maybe if you're a printer, then maybe you need new equipment to, do all the latest and greatest, and maybe 3D printing or something of that nature would be a kind of investment that the CDFI might make in a small business in terms of an equipment loan. And then sometimes there's operating capital loans that might be extended to businesses who, for example, a business that may have a federal contract that's maybe worth $3 million, and sometimes you have to wait 90, 120 days to get your payment from the federal government. You may be able to access an operating capital loan to float you the first 90 days expenses. So these are the type of lending that the CDFIs are looking to do. And each loan is going to create at least one job, right? So this whole idea is to create employment opportunities, either self-employment or employment through a business. So it may be excellent idea to see how in your community you can create an ecosystem where you convene disability providers and the community development financial institutions in your market, local banks even, and talk about ways or the needs of your community. What do people with disabilities in your community need? Is there a need for, home modifications in which maybe, the need to get a ramp, so that someone in a wheelchair can get in and out of their home, and maybe they don't have $5,000 to finance that, but they could get a low interest rate from the CDFI whereas maybe the bank might provide them a loan at 18%, maybe the CDFI will provide them a loan at 15%. And that will save on the cost of it, and the payment might be more affordable. And so the whole point in CDFIs is to provide low cost capital for those in need in low and low income communities. So CDFIs are good partners that you could work with. Now, they are seeking ways in which they can increase their lending among people with disabilities. So trust me, they're anxious to make a connection with you. So I want you to not be shy about identifying what your needs are and how creating a collaboration with CDFIs in your market could create high impacts for the people with disabilities. Find your local VR and understand how their programs, the supports and resources that they provide for people with disabilities could be integrated into a CDFI. Could they provide technical assistance that's unique to people with disabilities that would support a borrower pipeline? Could they participate in funding advocacy for people with disabilities to increase the amount of funding the CDFI puts out in the market for people with disabilities? But the way that that's going to happen is by increasing the demand. And so then lastly, I think we need to work with these collaborations and talk about what measurements we will be collecting to determine what impacts are happening with people with disabilities, and if the relationships are a good mission fit and are producing real benefits for people with disabilities. And so I would like to take you over to the CDFI website and show you exactly how you can identify a CDFI near you. And so there is a searchable database. You can find the CDFI at www.cdfifund.gov. So, lucky for all of us out in the public, the CDFI has a searchable awards database. This is a magnificent tool that's free and available, and it's so easy for you to use. I'm going to demonstrate for you right now just how simple it is to find out who has the money. Well, first we'll find out where are the CDFIs. So here's several ways you can have. There's a searchable awards database, and there are historical awards documents. In the historical awards document, you can just go from year to year for a synopsis. And I'll just show you real quick while we're doing this, and it'll show you who won the money. And so we'll just open this one real quick. And it's just an awards book. This is the New Market Tax Credit Program. And it just tells you everyone who won an award, how many applicants there were, how many geographic locations won, how much money they put out, right? And where, and then who all got the money. So you can see here, everybody who got the money for New Markets tax credits, right? But today, what we're going to do is focus on this award searchable database, right? And so let's just say that you live in New Hampshire. So we are going to see if there are some CDFIs in New Hampshire, right? So we'll select New Hampshire, we'll select the CDFI FA program, and we'll hit the search. We'll hit apply, and it will search. And so now, do you see this? There are actually at least 26 entities. So I'm going to just make sure we can see them all. And so the New Hampshire Community Loan Fund has received many awards. As you can see, from 1996, they had $1 million award. And let's come on down to the more recent awards, and you will see that in 2020, they received $557,000 in an award. If you click on them, it will show you their contact, right? So you can see right here where their website is, and you can go over there and you can visit that website and find out, what they are doing in terms of what kind of loan products they have. Now I'm going to show you also another way, and I'm going to actually this time really use the award book from the CDFI program. Okay, so we have the CDFI award program book from 2020, and you will see that they made 357 awards at $187.3 million. 207 grants went to loan funds, 108 credit unions received funding, 36 banks and 6 venture capitalists received funds. Now, out of those, 17 organizations received money specifically for disability. And those organizations were 16 loan funds and 1 bank. And 14 of them served major urban markets, 2 primarily served minority urban markets, and 1 was in a rural community. And so what I want to share with you is the list. Okay, so if you look in the awards book, it's going to show you who got the money, where they're located, what their base FA award is. Now, you must receive a base award in order to be eligible for persistent poverty counties, disability financing, healthy food financial finance initiative, and you can never get both a TA and a base FA. You must have one or the other, okay? Now, let us just find out where the disability money is by coming down this column and seeing who has some. And so we go here and we find Blue Hub Fund Inc., right? So Blue Hub Fund Inc., let's see if we can find them in the searchable database, right? So we go back to the searchable database. All right, here we go. So you see Blue Hub has $268,750 for disability assistance. And you can see here 17 entities, like I described, received this funding. And so just this simple, you now have a record of everyone who received funding in 2020 and exactly how much disability funding they have. Okay, so here are all the 17 entities. And so here in Massachusetts, we have the Blue Hub Loan Fund. Now, I happened to have looked up Blue Hub's Loan Fund, and they are an affiliate of Blue Hub Capital, which is a national nonprofit community finance organization with a 35-year history of building healthy communities where low-income people live and work. And since 1985, they have invested over $1.3 billion to create and preserve 21,500 units of affordable housing, 13,000 jobs, healthcare services for 197,000 patients, and education and childcare for 50,000 children. Blue Hub received a total of $3,768,750 from the CDFI fund in the 2020 round. $650,000 was for financial assistance to expand lending in Texas, which is a new geography for them, and $2.7 million for healthy food finance. And what you're really interested in is the $268,750 for disability fund finance financial assistance for increasing financing for supportive housing projects that serve homeless individuals and people with disabilities, including physical, mental, and behavioral health challenges. So if you are a disability agency that serves, provides housing in some way, or with supportive services, then they might make a good partner for you to attract additional investments, to make new investments. Here are some resources that can help you gain additional information about the CDFI, and some of the research that has been done around the needs of people with disabilities. The ABLE National Resource Center is a good connector. And there's a lot of work that has been happening with disability providers about expanding the CDFI fund's impact in the disability community. And the CDFI fund is developing a catalog of all of that training and making it available through their Access for All program. And so while COVID has impacted the delivery of that, the CDFI is working diligently to bring those resources online and make them available to you. So Dr. Davies, I'd like to just spend a few minutes, you and I, just talking about ways in which the disability community can develop an ecosystem that would include CDFIs, that could really be a collaboration to help create that ecosystem, you know, because the linkages already exist, or the organizations exist. What is needed is the linkages to be made, right?
Exactly.
Because you have entities that serve people with disability in the housing arena and workforce development, you know, job skill training and things of that nature. And what we have to do is to convene all of those providers and see how we can develop a continuum of care, or a capsule where we all know that if I'm working on something related to workforce development, then these are the disability providers who may be able to help me further that. And really, this money is available to any CDFI. If I had gone through the database and just searched CDFIs in the state of New Hampshire, you would be able to see all of the CDFIs in the state of New Hampshire.
Right.
And you could just pick any of those CDFIs that's close to you. Just because they don't have access to disability financing today, that's your opportunity to work with them, to help them identify what your needs are, and to develop a financial product that will support your borrowers, you know, people with disability as borrowers. And they will need you to understand the impacts that lending in communities with people with disabilities has, because they don't understand, you know, ABLE or some of the other restrictions on income that are sometimes barriers to people with disabilities accessing capital.
Exactly. And if I could, I'd just like to share that, you know, those of you in the training audience, you know, the workforce piece is a huge component, right? Because you're VR agencies and VR service providers. You already have a statewide network of agencies that deliver employment services, or regional networks of providers. You know, the same is true with CDFIs. So we all sort of operate in our areas of influence. And Dr. Farmer is absolutely correct. What is needed is a convening. So by conducting some of that analysis of the networks, you know, logging into the searchable database, finding out who are the CDFIs in your area, and then translating what you do, which we're attempting to do here today, and how CDFIs can help you accomplish your mission at addressing issues of poverty and economic opportunity. So it's really bringing people together It's not asking VR agencies or employment service providers to become CDFIs, but rather use the pre-existing infrastructure that exists in local communities that CDFIs already provide, and then develop the pipeline.
Dr. Davies, I think that was an excellent point that you just made. I would like people who are in this training today to understand that you do not have to create a CDFI for yourself, but you can create a CDFI for yourself if you believe that's the best way for your people with disability to be served. But the thing is, you may have to change your mission because the CDFI is only going to provide funding to entities that actually provide financial tools or products and services to businesses or individuals, right? So you will probably need to have at least one product. And just say, for example, maybe there's a person or group out there that already works in this space providing financial support to people who need assisted technology, right? So let's just say you already, you work with people who are deaf and you provide them telephone equipment so that they're able to, communicate with their computer or their phone or whatever. And so you already have been providing that, then you might already be providing a financial product.
Right, and a good example of that that those of you in the training audience may be aware of are the assistive technology loan fund programs. There are actually some models and I believe I saw one listed in the searchable database when you pulled up the disability fund allocation from the CDFI fund. But some of those programs, including in Pennsylvania, those assistive technology loan funds have morphed into and become CDFIs because it started out with a financial product. And then when they realized that people don't just need assistive technology loan funds, they actually would benefit from self-employment funds. So that was a natural evolution that occurred of that assistive technology loan program. So it's really getting to know the people in your community, the organizations in your community that work in the CDFI arena, educating them using your VR data, your aware data, any qualitative data that you can get on, let's say, the people who have an individual plan for employment goal of self-employment, and finding out what might their needs be. And if you don't know what questions to ask, like if you don't know what kind of loan program would work best for them, that's the expertise the CDFI could bring to you. If you can learn and provide as much information about the potential borrowers and the characteristics and the things that they might need and have that convening with these partners, it's a perfect union of, of content expertise, the CDFI industry, knowing the products and loans that might best fit, how to structure those, and then you knowing your customer base of people that use VR services, right?
Right. So, Dr. Davies, let's show them an example. They can search by state and by the program and what year. So just so that we have a short list, I only did CDFIs that are funded in year 2020 that are in the state of California. And we came up with a total of 19 entities. You'll see here there's 19 entities. This is the way that you identify who the CDFIs are. Now, once you identify them, you just click on them and then you see, oh, okay, so beneficialstate.com, right? So I just copy the link. I open up a new window. I pop the link in there and I go right over to their website, okay? And then we can find out who they are, what they do. So again, if we just look at the CDFIs who received funding in 2020 to serve people with disabilities, we come down to 17 providers across the country. Now, what we have to do is look at who currently has money, but that's not the end. If there's a CDFI near you that does not currently have disability financing, that's a wonderful opportunity for you to work with them to build their capacity to be able to provide financing for people with disabilities and for them to attract additional resources. It's a win-win for your organization, for people with disabilities, and it is a win-win for that CDFI and the US Treasury, who has one goal, and that is to increase access to affordable capital for low-income people across the United States. So what Dr. Davies and I is suggesting is that you work collaboratively, maybe convene the disability providers and the banks, the CDFIs, and other financial, like philanthropists even, some of the grant providers, and get them all in one room and say to them, these are our needs. So this is the current situation. And give providers the opportunity to talk about ways in which the policies, right, are create barriers for them. So, you know, we start off with where we are today. This is the landscape. This is the policy that sets out the funding, and these are the rules that may impinge. For example, sometimes there are income restrictions on people with disabilities that would prevent them from earning an income beyond a certain amount. But you have to see from state to state, those vary. In a state like California, it might be as much as $65,000 to $150,000. And then in other states, like Nebraska, it could be as low as $19,000. Right, is the maximum. So you have to, those kind of things that the CDFI would never figure out without your help. So you're a critical piece to bringing resources for people with disabilities. So I want you to try creating an ecosystem where you convene the disability and financial partners in your community once or twice a year, or quarterly in the beginning, until you can develop a financial product that meets the needs and you can demonstrate the true demand, right? Because the need might be building a ramp so I can get in and out of my back door. It may be, you know, some type of equipment that we talked about previously. It may be putting people to work. What if one of you out there who provide workforce development type trainings, right, to people with disabilities, had the opportunity to partner with someone who was looking to create a new business and would hire people with disabilities, right? And so how awesome would that be for you to be able to do that? Or maybe you have, you know, you work with individuals helping to teach them how to make crafts. Well, what if you could create a retail opportunity for them, you know, a maker space maybe, and they could sell their wares. There's just so many, your imagination is the only thing that can limit you from developing solid partnerships and creating real impacts for people with disabilities.
Thank you, Dr. Farmer. And I just want to emphasize a few of the points that you made, and emphasize this one in particular, which is, you know, VR systems are excellent at helping to, you know, cultivate employment opportunity for people with disabilities, right? And what CDFIs really specializes in is in economic development, right? So, like I said before, you know, you don't need to become a CDFI. Maybe that's something down the road that you'll want to explore, but this is really about being proactive. It's not just necessarily working with the supply of jobs available today, but planning for the jobs tomorrow and some of those other really critical aspects of living in the community that need to be addressed in order for people with disabilities to participate as fully as possible in the workforce. Housing, transportation, all of those things. So to move forward in terms of convening, you know, getting the partners together is really important. And then leveraging your networks. DeWanda talked about, bringing in foundations and banks, all really important players. And another content expertise that is really critical, especially if you're going to engage in direct lending for self-employment or some other sort of product, is the benefit specialist, the work incentive specialist that VR will pay for to help people navigate the benefits, because many of these CDFIs aren't going to know how to navigate those benefits. They're going to rely on VR and disability service providers to provide that content expertise. So it's all about the partners and all about making use of the best sources and uses of those funds to accomplish that development goal. And we firmly believe that CDFIs are untapped, and they're a great partner in the future for VR systems. We want to thank you today for participating in the session, and we hope to be a resource to you. Our contact information is available, and both my email and Dr. Farmer's email and phone numbers are there. Let us know how we can help you, and we look forward to entertaining some questions from you.